Hello, this is Carlos Asilis from Glovista Investments, here to share our monthly commentary as October ends. The month of October witnessed a very strong performance across a broad spectrum of risk assets, including equities and credit. We attribute such strong performance to a number of factors, including resilient activity momentum at a global level. Secondly, declining virus infection rates. Third, robust quarterly earnings performance for corporates across a number of regions around the world. Fourth, a weakening US dollar. And fifth, favorable seasonality patterns as the month of October draws to a close. Such strong performance unfolded despite a number of investor concerns pertaining to global supply chain issues, as well as withdrawal of fiscal support across some of the world's major economic blocs, particularly the US. Such issues, especially on the global supply chain, are being manifested via a number of factors that could result in investor concerns and particularly earnings as the year draws to a close. For example, supply chain issues impact inflation from a cost push perspective adversely. Secondly, it also impacts or exerts pressure on corporates to raise inventory levels, thereby pressuring margins to the downside. And third, such global supply chain issues also pressure corporate profit margins via different aspects. What we've seen in the data has been a far more discriminating stance on the part of market responses to such dynamics that are pernicious, that we expect to be transitory. A far more discriminating effect across industries and sectors within the global equity space. Thereby, the markets are clearly signaling a discounting of such dynamics. From a portfolio strategy perspective, the Glovista investment team continues to favor global equities over fixed income and cash, owing to relative valuations and relative earnings momentum dynamics. From a style perspective, we continue to favor value-oriented stocks and markets, particularly as rates continue to reset higher, and as the breadth of the global economic momentum continues to gain pace, with a number of countries around the world lifting a number of restrictions as the virus infection rates come down throughout the course of 2022. Outside value-oriented sectors, and particularly we favor energy and financials, we also continue to favor US mega cap tech stocks that have done very well but remain attractive. Within fixed income, the Glovista team throughout the course of October, particularly towards the end of the month, actually decided to trim our very significant underweight bond duration stance, as we believe that the interest rate futures markets are discounting now close to 3 hikes for the U.S. Fed, for U.S. Policy rate in the year 2022, which we feel is more than a sufficient discounting in terms of what's likely to unfold. From a policy risk or from a market risk perspective, as we look ahead, we identify a number of factors that could be of concern to investors, including overly aggressive fiscal tightening, geopolitical issues, particularly between China and Taiwan, Middle East, and also North Korea. Thank you.